For more movers, names to watch, Diane King Hall, host of Morning Movers, is with us taking a look here at Domino's Pizza. And you'll give us the numbers, but another company announcing some layoffs, too.
Yeah, and just weakness with the consumer demand because same-store sales came in weaker than expected. You are seeing the bulls fight back right now, though, because shares did start out under pressure off the weak results on same-store sales and weaker than expected revenue. It did beat on a profit. Adjusted EPS was $4.33 a share, so that was better than expected. You saw growth there. Same-store sales did decline 0.5%, and the street was expecting a small increase in same-store sales. Now, you did see strength in international sales. International same-store sales, that increased 3.7%. That was well ahead of estimates. Not enough to account for the weakness that we're seeing in terms of the U.S. consumer. And keep in mind, we've seen this weakness in consumer sentiment recently, and the question was, would it play out in actual demand numbers? And so far, at least with some of the results we're seeing, we are seeing some softness. We saw that with Chipotle recently, and now we're seeing that with Domino's. Restaurant traffic slowed in both February and March for Domino's. So we saw those similar patterns with Chipotle. They blamed it on a seasonal effect, but it's something that we'll want to continue to watch. Now, obviously, Domino's could try and make up with this with the international consumer. And if we continue to see strength in the job market, that may make the U.S. consumer start to feel more confident again, more resilient again, and maybe they'll continue to keep up with the Pizza Fridays. Nicole.
All right. Thank you for that. But, it's interesting, too, as you were talking, and now it's taking a leg down. When you first started talking, it was in the positive.
Yeah.
And now, just as the moments people are coming in and trading, it's down 1.4% just in this short period of time. And when we think about big picture, even Chipotle gave its slowest growth numbers, some concerns about consumer spend. I mean, this is going to be the food story.
Yeah, I think so. Absolutely. And you think usually with the dining out perspective, and that's probably why we've seen strength in Domino's year to date. I mean, the stock is up before today, up double digits year to date. But the idea is that even in a weakening consumer environment, households will still hold on to their pizza because it's a lower price point compared to, say, for instance, Chipotle when you're feeding a family, obviously. But again, it is something to pay attention to. Now, one of the things that Domino's has been doing to try to stoke demand is deals, promotions, etc. They had their promotional boost week where they offered like 50% off of online orders. So they may have to do more promotions and incentives to keep up demand, Nicole.
All right. Next up, we have Boeing with an upgrade today.
Yes. I love this one. Blue skies for Boeing right now off the back of this upgrade. This is from Bernstein. They're upgrading Boeing to outperform from market perform. Their new price target is $218 a share. So certainly signals upside from here. Implies, essentially more than 20% upside from yesterday's closing price. They think that, Boeing is regaining some of the momentum after the challenges that they had last year. I mean, it's been a challenging several years for the company. Bernstein saying, quote, Boeing is now making the progress it needed for the growth trajectory we expected before that door plug incident in January 2024. We know that was a huge blow to Boeing, and they face intense scrutiny there. They're not out of the woods yet. Bernstein, makes that point. FAA obviously has increased scrutiny on Boeing. Now, that has, on the good side, led them to stronger processes and, maintaining the safety. But now we're seeing production stabilize along with these processes. 737 MAX production expected to hit 38 planes a month by July. Potential ramp up by the year end to higher than that, to more than 40 a month by the year end. 787 Dreamliner also expected to increase production with about 7 units a month targeted for the second half of this year. And then their defense outlook looks better for Boeing. They won that F-47 fighter jet contract under President Trump's administration. So that boosts the defense segment for it. So it's got some strong tailwinds for the company right now. Now, of course, we knew that one risk that it has is China halting some of its halting deliveries, rather, not some. But Bernstein makes the point that Boeing can remarket these jets. And, while tariffs are a drag, that is expected to be manageable for Boeing.
All right. And last but not least, we'll take a look at Lilly double downgrade. over at HSBC.
Yeah, HSBC downgrading it to reduce from a buy. They've slashed their price target majorly for Eli Lilly. Huge. They see, downside from here. They've slashed their price target to $700 a share. They previously had a price target of $1,150. So that implies more than 20% downside from where we finished on Friday for Eli Lilly. They flagged the high valuation. They think the valuation is too high, especially when you compared it to the S&P 500. And to them, that makes it obviously vulnerable, especially with macro conditions weakening. And then they also think that the market just might be too bullish on this GLP-1s. And, especially we don't know fully if there's, if the continued progress with regard to these, the continued efficacy rate, and then people just keeping up with them. So that's a risk. And then they still think that there is some competitive pressure for Eli Lilly. It's been the, in terms of how the shares perform, it's performed better than Novo Nordisk, but they see increasing competition from Novo Nordisk, Ozempic, and Wegovy.
All right. Thank you for all of that.
you.
Diane King Hall of Morning Movers.